we are good to go then. Hello and welcome everyone. Really excited to see some of you here. Hopefully many more will join us in sort of due time. In the interest of time, we have a lot to kind of cover in the 60 minutes. So I'm just going to get us started and then hopefully more people will come in as we're going through some of the introductory slides. So really excited to kind of have you in this session today. In this session, we're going to be launching our new toolkit, which is called Growing Sustainably, and it's focused on sort of improving financial sustainability of ECD and childcare centers. This toolkit particularly is focused more towards emergencies, but the learnings are sort of transferable across low resource contexts as well. So if you are someone who's not sort of working directly in an emergency setting, this session will still be useful for you, and we hope you kind of stay with us till the end. My name is Priyanka, and I lead the development of the Early Childhood Education Development Evidence Hub in Emergencies here at the Global Schools Forum. The ECD Evidence Hub primarily builds practical tools for sort of grassroots organizations to help them strengthen sort of their ECD services. Really excited to kind of start off this session, and then we have a panel of wonderful speakers who will kind of weigh in on this important sort of discussion. Would also love to hear from you on chat on where you're joining us from today, what your name is, which organization you're joining us from. So if you can just kind of start making some of those introductions in the chat for yourself, that would be lovely. I'm going to move us along. And start by just introducing GSF for those of you who are new and may not be familiar with the community and the work that we do. The Global Schools Forum is a collaborative community and innovation accelerator and partnership builder for non-state organizations working to improve education at scale for underserved children in low and middle income countries. The network currently has 177 organizations working across 71 countries and impacting close to 134 million children. A little bit about the project itself. So as part of the work that we do on the ECD in Emergencies Evidence Hub, one of the challenges that we heard about from our community of practitioners was around sort of building financially sustainable ECD and childcare centers, primarily in emergencies that can continue to sort of serve families and communities without sort of disruption. We heard challenges around the aid being sort of short-term or fragmented, and parents being unable to earn a livelihood or income for various sort of policy regulation reasons, which is why it becomes the conversation around sort of financial resilience becomes even more important in this context. So that led us to really take on a collaborative project with practitioners to really build tools and resources and collate ideas on how to plan better, manage costs, and test out sort of diverse revenue sources. So we'd just like to thank all the partners who really gave us time and contributed to detailed case studies for this toolkit. But we'd also like to just take a minute to thank all of those wonderful practitioners who came forward in our workshop that we conducted in person in Uganda and gave us really critical feedback from a practice-led perspective on how we can build a toolkit with resources and templates that is truly valuable to the larger community of practitioners working in this area. We'd also like to thank Lucas, who's also on the call with us today, who kind of led the development of the toolkit, and he's also shortly going to take us through the entire toolkit process. And we'd like to thank Sane for her sort of critical thought partnership throughout the development of this toolkit. And she's also be moderating a part of this session. So also just wanted to take a minute to acknowledge all your work on this toolkit that we now have put together. Let's quickly jump into the objectives then. The objectives really are threefold. One, is really to understand why financial sustainability is important and how do we build financially sustainable programs. And the way we'll do it is through a panel discussion where we have diverse sort of perspectives coming from 3 organizations working in different contexts and how they're kind of tackling this challenge. We'll then kind of move into the walkthrough of the toolkit itself and sort of like the templates that we've put together and the best practices and ideas that we have pulled together. Lucas is going to take us through some of this. And then lastly, we want to spend some time talking about how this toolkit can be used in your context and how as GSF we can support you. We definitely want to stress that this is not a one-time conversation. We do want to continue to find ways to engage with the larger community. So please do stay on to have that discussion towards the end as well. Couple of quick housekeeping points. So one, this webinar is being recorded and we're going to send the link to the recording with you after the event is done. We have a Q&A feature on Zoom that you can use to ask your questions. There is dedicated time at the end to ask the questions, but please feel free to ask your questions as they come to you. And we'll have our panelists kind of answer some of the questions over chat and some towards the end during the discussion segment. And lastly, we have a poll at the end of the session. It will take 1 minute, but is incredibly valuable to us to kind of shape future learning. So we request you to also take some time to take the poll for us. On that note, I'm going to pass it on to our moderator for the panel discussion, Sane. Like I said, she has been a critical thought partner for us in the toolkit development process, but also she brings in about 25 years of experience in this space of business expansion focused on various sectors and across various geographies. She takes a keen interest in sort of building sort of economic viability in sort of low resource, low income communities. And she's done a lot of work on sort of supporting SMEs and also on social franchising models. She has experience from sort of building a social franchising model through her work in an ECED-focused NGO in South Africa, where she was the Chief Growth Officer. So we're really excited, Sane, to have you guide this discussion for us. And I'm going to pass it on to you to start us off with a little bit of framing and then lead us through the panel discussion.
Good afternoon, everyone, and thank you so much, Priyanka, for that wonderful introduction. As Priyanka mentioned, I'm Sanem Kalose, and it's really great to be with all of you this afternoon as we launch what I would call probably the most needed financial sustainability toolkit. And this toolkit is really designed to assist all of us who work in the childcare space or early learning and run programs so that we can run them in a sustainable manner and continue to add value in the communities in which we operate. So as we get an understanding of this financial sustainability toolkit, it's important that we reflect for a few minutes on sort of what you could call the macro and micro social economic issues that affect all the areas we operate in. And that will help us understand the complexities as well as the opportunities at hand. So if we think about that and really how we grow into sustainability, you will see that young children and families are at the forefront of emergencies. And what does that really mean? It means they are the most vulnerable, and therefore they tend to be the first people to suffer when emergencies happen, and they get impacted the most. So children are the most vulnerable, and therefore their well-being clearly shows how these severe conditions and their communities actually impact them. So when you think about that and you look at the stats here, you'll see that just under 50% of the world lives in areas that are affected and have emergencies within these areas. And that's a high percentage of the world when we think about development and people progressing. At the same time, you'll see that 10 countries that are most affected by emergencies see a significant drop in GDP ranging from about 30 to 68%. And if you think about what is GDP, GDP is an indicator we use to understand the strength of an economy of a country. And so when a GDP reduces, what it means is the economy of that country is shrinking. And typically when an economy shrinks, the resources go down and the financial opportunities reduce, which really put more strain. But if we think about that, that strain that's put on people is largely what gives rise to things like mental health and so forth. So as we move into the segments, understanding what we can do in these spaces, we really need to see how we address this, because 25% of the population in these areas is sort of at that pre-primary age. And at the same time, that 25%, only 30% of them, and up to 30%, I think 30% is quite a high number, are actually provided with childcare or early learning services. And therefore, it's imperative that we start to do something and see what can be done to give better investment. And as you can see, when you look at it at a global scale, only 9% of all sort of 26 humanitarian investment resource plans address these issues. And 9% is really not enough to effect change. So, looking at that and thinking of our context as practitioners and people who work in these spaces, if we think of the challenges, we also know that investment in these areas can fundamentally shift the needle. So, if we look at the next slide, you'll see that it highlights that investment in emergencies, and especially in ECED, can impact the various areas. It is known to be the highest return, which means the money you invest in these areas is very effective. Secondly, it provides for life-saving protection and helps mitigate what could be potentially worse circumstances than those we find today. It also reduces the long-term impact of conflict and other things because it enables communities. So if we think about those, the investment and how investment can influence, the question really becomes, why then do we still see these simple barriers? And they're really three key barriers I'd like to talk through this afternoon, because I think these barriers speak mostly to the immediate financial impact that institutions or sites experience. So when you think about the challenges in accessing high quality sites in this area, you find that one of the main and probably one of the primary challenges is parents' ability to pay or contribute fees, either in the form of actual money or in the form of in-kind support, which really would support and cushion the centers. At the same time, donor funding in these situations, because of the erratic nature or the political status, tend to be quite short term. They tend to be fragmented, preventing those of us who operate in this space to put together initiatives and work in a sustainable and manageable way. And then lastly, funds often flow from the top, and in their flowing from the top down to from international organizations to our organizations, either as NGOs or individual sites, they tend to be limited and structured in a way that doesn't really enable, purely because of this multi-level funding model, as well as the distance or the gap between those funding us and their understanding of the challenges on the ground. So now, if we take a moment and you reflect on your particular situation within your context and where you are working, maybe you can use the chat to share with ourselves and those online today. Just when you think about these things I've spoken to, the high numbers of children in need, the complexities experienced in the situation, does any of this resonate with your particular experience? And what is the biggest barrier that you are facing in the communities that you are looking to serve, especially with regards to financial sustainability? And so if we can just put those comments in the chat, that would really be great, as that will help us and really help the panelists as well contextualize some of what they will share with us with some of those comments. So as we write those different ideas down, I think one of the things we all know is that supporting these spaces requires a multiple or a number of stakeholders and actors. And because of that, financial sustainability in our centers does not sit with one actor alone. It does not sit with only government. It does not sit with only parents. And it also does not sit with only yourselves as practitioners and implementers in this space. For it to be effective, we need support from government. We need relevant support from donors and any development organizations. At the same time, we potentially need to be able to access financial services from those financial providers in our areas. And then we also need non-government actors to support us in this space. And then lastly, how does a caregiver support this by also supporting their children in this space? So it's quite a complex area that we operate in, requiring a lot of support from various actors. So we're going to use this thinking to really help us understand how then could this toolkit enable us to achieve better financial sustainability? And if you think about the number of these actors and you think about how much most of us in our individual spaces cannot influence these actors enough, it then becomes ourselves in our spaces where we are operating. How do we find ways to move forward towards a sustainable financing model? How do we look at things like revenue generation, diversification of resources? How do we plan better financially? What are the limitations, the opportunities? And within the limited resources, how do we put in the right disciplines such that when we do get larger sums of money, we're able to use them effectively? And then how do we track where we need to go? Now, if we think of these variety of questions as we get into this, and before we take the Q&A, as Priyanka share, it's probably useful for us and very useful for us to learn from some seasoned organizations who have walked the journey that many of us are grappling with on a daily basis. And I say walked in the past tense, but they are still walking this journey. And I think, like everyone else, continue to learn every day. And I'll take this opportunity to move towards the panel, and they will share their thinking around sustainability, where they started, how they evolved, what they tried that worked, and also what they tried that potentially didn't work, and how they adapted to meet the needs of their communities they serve. And so after that, we'll then move on to how does the toolkit work? What do you need to understand about the toolkit? And then we'll be able to integrate these two. So I'd like to take this opportunity to welcome Victoria, Lynette, and Irene to this panel. I'm really honored to be moderating this panel this afternoon. And I think on that note, we are going to move straight into a brief introduction. What I'd like to ask is that you each share your name, the name of your organization, as well as a bit about your organization and your area of operation from a location perspective. So I think we'll start off with Victoria.
Hi, good afternoon, everyone. It's a pleasure to be here. My name is Victoria Arciniegas. I'm the Executive Director of IO2. We are a social enterprise that works mainly in Colombia and in Latin America, in Mexico specifically. We run direct early childhood centers and also do some innovation and quality in consultancy projects. Thank you.
Thank you, Lynette.
Hi, good afternoon, everyone. My name is Lynette Apio. I am a project leader with Open Capital. Open Capital is an impact consulting firm that's headquartered in Kenya, but I work in the Uganda office and will largely be speaking about our work in Uganda today.
Hello, good afternoon, everyone. It's a great opportunity to be with you all. This is Chomhanji Irene from Makasi Rescue Foundation, a refugee-led organization. It's been in existence for close to 8 years. I'm the finance officer and we operate in Kampala, Uganda. Thank you.
Thank you so much for those introductions. And as you can see, folks, we're very fortunate to have organizations that operate across East Africa and as well as the South Americas, which will be giving us insights today. So without taking more time, I think a good place to always start is what are we trying to achieve? What is the ideal state of sustainability? What would it look like in these contexts, which are very under-resourced and have a number of challenges? So if we think about this, just would love to hear from you. What would ECED look like in emergency context if we had an ideal world that we could live in and deliver against? Victoria?
So this is a very tricky question. I'm going to begin with some context about Colombia because I think it's important to know what we refer as we talk about emergency settings. So Colombia has a long history of armed conflict and violence, but also we have a migration crisis with more than 2.8 million of Venezuela migrants and refugees that are settled in Colombia. So having this context in mind, from the start, we have been thinking about what does financial sustainability looks like in a early childhood center. And for us, it's very simple. We have to be able to cover all the costs. So it sounds simple, but it's difficult in practice because also the cover cost mainly refers to staff, infrastructures, and materials, but we need to not rely in short-term funding. So in Colombia, there's a particular government funding from the public sector. We have a national entity that funds these early childhood services, but these contracts often leave hidden costs uncovered. For example, we know they don't cover transport or meals. So for us, it's very, very important, and the financial sustainability means that we have to work with not only the public funding, but also with the private funding. So I'm going to leave you 4 ideas that are very important for us: diversity in income sources. As I was mentioning, we don't only know that we need government funding, but we need private sector and philanthropic funding, so the centers don't depend on just one stream. Also, when you work in emergency settings, adapt to the changing contexts. It's very, very important because we need to mix formal centers with community and more home-based childcare while training caregivers to earn a stable living. And finally, to lower barriers from families. So the families, we know they can cover, for example, transport of meals. We need to lower these barriers through subsidies, employer childcare, or support with other income fundings. So for us, the sustainability, and as I was mentioning, it's a very simple question, but it becomes difficult in practice. It means that we need to work across sectors. And in IO2, and I'm going to explore this afterwards, we really have managed to have like a revenue stream that allows to have both public funding and private funding, so our business model can have this sustainability in our early childhood centers.
Thank you, Victoria. Lynette, what does ideal mean to Open Capital?
Yeah, so maybe to set some context, so Open Capital will typically, our engagement in the sector is designing and implementing interventions. And so when we were first approached by the Hilton Foundation, we sort of went onto the ground and conducted this research. And something that would be helpful to understand about Uganda is, while the government provides different levels of support in the ecosystem, it does not fund ECD, right? That's typically in the hands of the community, in the hands of the private sector. And so we quickly learned that while it may be most ECD centers are reliant either on school fees from parents, which, as we know, it's tough for parents to sustain in this sort of context, but more so even on philanthropic funding, similar to what is happening in Colombia. And while it may be difficult to eliminate that, we view sustainability as working with ECD centers to help them sort of set up a baseline level of income, again, similar to what has been shared, so that they're not entirely dependent on one or two sources, right? And I think I'll speak about 3 main areas in which we view sustainability for an ECD center. The first one is the diversified income streams I've mentioned. And here, very similarly, we're trying to help ECD centers continue to operate and cover their costs, even if there's funding gaps, but also to be more resilient, and they can sort of weather any economic downturns, right, that may occur. The second one, and I'll refer back to the image that Sanya spoke to earlier, with these different players involved to sort of support financial sustainability, is the financial service providers' access to finance. I think it's really critical that we help not just individuals and parents integrate within the financial systems in our different countries, but also the organizations like ECED centers. I know there's been some work done in Uganda, for example. I think there's a consortium of like Finca, Opportunity International, and PHB that's sort of been working to do this kind of work, but it seems like there's more progress for individuals rather than the ECD centers themselves, the organizations. So something we're really curious to see is what needs to happen for an ECD center to be well positioned to access lines of credit so that they can support their growth. And maybe that means having a demonstrated revenue stream that they can present to a bank, or having accurate records of their revenues and costs. We just have hypotheses here, and ideally we would like to work with financial service providers to sort of validate those and make that more accessible for ECD centers. So the second one would be access to finance. And then the last one, and Sanya also hinted on this earlier, is institutional strength. So beyond the finances, how do we ensure that these centers have strong management capacity to not only fundraise, but also manage any funds they may receive independently? And so I think those three pillars would really support an ideal state for ECD centers.
Thank you, Lynette. Irene, from your side in Makasi's Rescue Foundation, how do you see this ideal state impacting your area?
An ideal state of sustainability for an ECED as a Makasi Rescue Foundation would ensure that the center remains functional, resilient, and supportive of children's well-being even during crisis. It has to be safe and accessible for learners, financial sustainability through diversified funding and local resource mobilization. Additionally, there must be strong community and stakeholder engagements to promote local ownership and capacity building for caregivers, parents, and community leaders. Thank you.
Thank you so much. I think here we have different sort of views on what the ideal sustainability means, but you can see it involves a variety of actors, whichever way. And if we think about that as organizations, when or how did you first realize that financial sustainability was needed? And when did you realize you needed to be intentional about making this financial sustainability a reality for the community you serve? So in that, what model did you deploy? What partnerships did you potentially engage? Or how did you manage to build up the resources, either through marketing strategies, and which strategies worked, which ones didn't? Just to give us a bit of insights of what you found and how you pivoted. Victoria?
So for us, it has been a long question. As I was mentioning, IO2 has 17 years of experience. For the first 10 years, we were only service implementers for the public sector. As Lynette was mentioning, here is in Colombia, we have a strong funding for the public sector, but this public funding requires matching funds in money. It's not in kind, but you have to subsidize the public sector or the ECD public centers. So in that moment, we weren't achieving nor the impact in the quality provision nor the financial results. So for us, that was a huge turning point, to really look at our business model as a social enterprise and to know if we want to have more reach or have a deeper impact, we really needed to diversify. So for us, this question has a turning point. We had to look to our business model in an integrated way. So it's diversification of services beyond the direct provision. So not only having early childhood centers, diversifying revenue streams, because as we were mentioned, financially sustainability does not sit with one actor. So it was really important to look to the other actors, private foundations, companies, and also to the families to align the different incentives. So when we realized that we have to look to a broader picture of our business model, we began to diversify. The first was we really needed to move from emergency settings to more higher income areas and to partner with some other companies. So we have a really strong partnership with a compensation fund. This is kind of a special organizations in Colombia that offers social and childcare benefits to employers. So we expanded our reach to provide childcare as an employee and as an employee benefit. Also, as the diversification of services began, we developed consulting services and we began to apply to bigger funding with international nonprofits. And finally, we license our educational model. We have a Reggio Emilia educational experience, and we began to license it to other practitioners. So what we has been working is to combine really different revenue streams that are made our model stronger, but it's a really like difficult practice to achieve because many of the pilots doesn't have the results that we have expected. So it has taken for at least more than 10 years to diversify both our funders to have like a complete revenue stream from the public and the private sector, but also to really identify what are the services that we need to offer that are different from the early childhood centers.
Thank you, Victoria. I think that's really interesting, the diversification around not only who funds you, but more the services, which came from the skills that already existed within the organization. And if we just think about that, Lynette, on your side, it seems that there's quite a diverse range and also community centered and so forth. Maybe you can talk a bit to how did that influence the pivot for open capital support?
Yeah. So again, I'll start by setting a bit of context. Open Capital, as I said, is a consulting firm, right? We've been in the industry about 15 years, but we didn't really enter early childhood development until around 2022. But we do have a long history of business thinking, if you will. So we kind of came in with that perspective, knowing we're not education experts, but maybe we can help players within the ecosystem think about how to operate more as businesses and sort of build that resilience and sustainability. So almost from the beginning for us, we're trying to think about how can we bring our unique perspective to the ecosystem. And so when we were on ground and talking to different players and understanding what interventions exist and where the gaps are, that's one of the things we're already thinking about, right? And so the three interventions, I think that we're really focused on financial resilience. Again, here looking at different layers of the ecosystem. And when I say layers, I mean, you have like the children in the middle, kind of that image from before at the center, and you have like the organizations that support them, the NGOs, the RLOs, and then you have like, the financial service providers and everyone else. So we're trying to think about how we could target players at different levels of the ecosystem to help them build their resilience and sort of build their financial sustainability. So closest to the end beneficiaries, I would say, is the ECED centers themselves. We looked at how can we support center management committees, not just to provide the typical sort of training they receive, which we're not experts in. So we partnered with Madrasa, which is an initiative of the Aga Khan Foundation, and they sort of came in and did the education element, right? And then we did the more business side of things, because essentially it's a group of parents that have volunteered to join a committee to run a school, but with no prior experience on how to operate an ECD center or even an ECD center as a business. And so the specific pieces that we covered, the modules that Open Capital covered, were looking at how can we help them understand how to position themselves as a business and how to build their fundraising capacity, right? Not just to perform better so that they can attract more parents to their school, but also how can they reach out to different players within the ecosystem and make sure they're, sort of diversifying their revenues. How can they think about what sort of income generating activities they could do at their centers to also provide, a supplemental source of income. So that was one. The second one was supporting local actors. We worked with a local NGO called LABE and a local refugee-led organization called SESI to provide them with technical advisory to help them essentially identify social enterprise models or revenue generating opportunities that they could pursue beyond what they are already doing, and sort of also help them diversify their revenue streams, right? So that would be the second layer. And then finally, we worked with the implementers for a project called Kulea Watoto. It's an ECED project that's been running across different parts of Uganda for the last, I think, maybe 2 years, also funded by the Hilton Foundation. And they were already looking at how can we help ECD centers set up income generating activities, but they also needed some capacity building to help them address the sustainability gaps they were seeing. So how can they assess beneficiaries' business plans and sort of handle that review process to make sure the ECD centers are setting themselves up for success? How can they evaluate any sustainability plans they're coming up with, so that business plans are more for the parents and sustainability plans for the ECD centers. And so we're helping them do that thinking for that process. And so I guess that would be the third layer. And I think what maybe didn't work as well was the amount of time and scope we were able to provide to these, I guess, different projects to essentially support the viability of them, right? Some beneficiaries struggled with the implementation. Like we gave them these cool ideas maybe, but they struggled to implement them when we were gone, right? And so I think what that really told us is we need to be more targeted. And also something that really came up was they were struggling to form linkages with the private sector. So we're really keen to look at market-based approaches this time around. And I guess what I mean by that is, I'll give an example. 2 models we're testing are looking at how can we support parents to set up income generating activities and link them to markets. Same thing with ECD centers across different settlements. How can they set up additional income generating activities, and how can we link them to off-takers so that they have guaranteed market for their products? So yeah. I'll be keen to discuss what we're doing this time around if anyone is interested, but that's sort of what I meant by market-based approaches. Yeah.
No, very interesting and very exciting. And I think just as we look at the time and think about the next question, I'm really keen to hear, Irene, from your side, how in this space, Makasi managed to get parents to pay 50% of their fees upfront. Maybe you can just talk to that specific element of what you did to improve sustainability.
Having noted that the donor-funded projects we had were not forever, from the start, we looked for a long-term plan to support continued operation of the center through financial sustainability to promote early learning and well-being of the children and caregivers and parents. We partnered with PHB Uganda through the second generation approach and introduced a cost-sharing mechanism between parents and centers. Consultation meetings were conducted and the stakeholders to agree on the new approach, which prompted acceptance and compliance for the fees payment. Through urban savings, loan station, different activities like urban gardening, income generating saving schemes were introduced to support parents to be able to raise fees for their children. After having that training and they accepted it, that's when we enforced the 50% timely fee policy that strengthened cash flow. We introduced requiring the parent to pay at least 50% of school fees at the beginning of each term, which this policy, which has clearly been communicated through center management meetings, parental meetings, and encouraged families to plan ahead, resulting in improved cash flows at the start of each term. This income stability allowed timely procurement of supplies and smoother delivery of ECD services. Thank you.
Very interesting. Thank you so much. And I think as we wrap up this panel, just one very last question, if you can just respond in one quick sentence. If we think about, we know we need other actors in this place to assist us, what would be the urgent and most urgent call, just one point, that we would want to call out for any one of these actors, specifically government or private sector? Over to you, Victoria.
So I'm gonna make it with 2 sentences. I was really struck in your presentation when you mentioned that in humanitarian response plans, we do not emphasize early learning. So I choose a call to action for the government and the donors because we must prioritize early childhood in emergency as a core investment. In Colombia specifically, we have achieved reach and scalability with the public sector funding. So for me, it's really important to the government to be involved and to allocate important funding in early childhood services.
Thank you so much. And what would you say, Lynette, to that question?
Yeah, I think I would speak to financial service providers because I think this is really critical and it would be good if we could unlock it. Is just really to help engage with players like ourselves and help us understand what needs to be true for you to extend credit to early childhood development centers so we can better understand how to support them to get to that point. Yeah.
Thank you. And Irene, from your side, what would be the key message?
Children in the crisis cannot wait for specific projects or short-term aid, ECED core public service, funded and planned alongside primary education with contingent allocations for emergencies. Without government leadership and budget commitment, donor-funded pilots will remain small island of impact instead of sustainable national system. Thank you.
Thank you so much. I think, folks online, as you've heard from our panelists, there are many things one needs to look at. And I hope that the insights that they've shared had given you food for thought for your own context. And with that, I'd like us to now hand over to Lucas so we can learn, who can equip us about how to use this financial toolkit. Over to you, Lucas. Thank you.
Thank you, Sen, and everyone who shared your own story. So very inspiring. Thanks a lot. Briefly presenting myself, I'm Lucas. I'm speaking from Brazil. I'm a social entrepreneur here in the country in the education sector. And I partner with GSF to support specifically on finance management, finance planning, and a little bit of fundraising as well. And was super happy to collaborate with Priyanka and the GSF team on building specifically this toolkit. So let me share my screen, and I would like to guide you through some slides and present you this resource. And I hope you like it. So I'm sure that this toolkit or this topic is a common challenge of everyone here in this room. It was great to hear from many organizations that are here with us. So a big shout out to Samuel, he's with us today, Daniel as well. So we heard from you many inspiring suggestions that we incorporated in this toolkit. So the challenge here is not only surviving so financially, right? So the challenge here is just really to use finance as a tool for your scaling journey, for your future sustainability, and to increase your impact. So this is the core challenge that we hope to address with some ideas and tools and case studies within this toolkit. So let me start with a little background. So the toolkit was developed with having some specific or different from different inputs here. So one is we held about 6 communities of practice within the GSF community to hear from our partner organizations. We did a lot of literature reviews and reports to really understand what experts are suggesting in this field, especially as a GSF or GSF way of doing things. We heard a lot of practitioners and making sure that their stories are contemplated in this toolkit. And finally, we had also a workshop in Uganda with about 14 organizations. So thanks, Sen and Priyanka for conducting it, receiving specific feedback from some organizations on this toolkit. So who is this toolkit for? This is an interesting conversation. The main message here is that it's not only for finance people. So I'm seeing also Carlston here for LRDP that we worked together during the labs experience, the labs process. And we also had this conversation. So CFOs, finance leads, we find it very practical and useful, but we really hope program managers, education specialists, and CEOs to use this toolkit and some ideas here to get around on main strategic decisions. So for example, a program manager here could work hand in hand with finance to cost a new project, while an education specialist could check, for example, where the planned features of the program is sustainable in the future. It makes sense in the current plan, for example. So the point here is, again, although different people will have different roles in making sure the organization is financially sustainable, these ideas of financial management are designed to put everyone in the table and make sure everyone are looking at the same priorities, to the same plan, and speaking the same language to really combine impact and financial sustainability. The three core ideas or three sections we would like to explore, we're exploring this toolkit are one, revenue generation, so finding ways to diversify income beyond traditional donor funding. So we heard a little bit from our panelists here about it. The second one is financial planning, so kind of forecasting and aligning resources with your future priorities, your risks and future plans. And the third one is financial management. So tracking, optimizing daily expenses and making sure that you have a early budget and you are tracking it properly. And just presenting a little bit of what you can find in the toolkit about these three sections. In the first one, we heard from many organizations this desire to diversify incomes beyond grants, donor funding, either to rely less on grants or to increase donor interest by presenting a financial sustainability plan with some level of revenues. So not necessarily for you to become a commercial organization 100% funded by your income, but diversifying your income streams. So hearing from practitioners, this toolkit explores like some examples for diversifying income. So Victoria just told us about some of their strategies. We also explore charging nominal fees where it makes sense, selling complementary services, cross-subsidiation, integrating livelihood programs for parents, so the Makasi experience, or trying out different funding models. You can also check this go-to-market strategy template that can help you to think about like in a step-by-step approach on what kind of revenue streams to prioritize, what makes sense in your context, and how to test them before putting a lot of effort on scaling a new revenue stream. So in the second topic, here is for me is especially important. So and I remember a conversation with Houston that I mentioned before here about it. So we know that most organizations already have some way of tracking expenses and budgeting for the current year, for example, but very few actually plan ahead for the long term. And this is what we are trying to address here in this section. So here our goal is to help you to build a kind of a 5-year financial plan. This means think about how you want to scale, the reach you aim for, how your fixed and variable costs will evolve over time, and if it's sustainable or not, if you need to change anything in the present to make your future more sustainable, and implications on your fundraising targets and internal capacity needs. And of course, this kind of plans, we are talking about 5-year plan in an emergency context where the challenges force us to adapt very quickly, right? So it is not a static plan. So it is supposed to be iterated every year, but having a plan really puts you in a position of proactively having a vision, presenting donors, your team and your partners a plan for the future and try to make it happen. And of course, adapt along the way, but not forcing you to not stay in the position of only seeing what you can receive and then what you can do with it. Of course, this kind of approach is essential for us, but we would like to present and strengthen this position of, again, proactively envisioning and building the future you want to build for your organization. The third one, and the final one, is the financial management topic. So here the toolkit provides a budgeting and finance management template. So for all the topics, you can download these templates and adapt for your organization. So in this one specifically, we are combining planning, expense tracking, reporting in just one place. It's a spreadsheet that you can customize. And what this does is really giving leaders a real-time picture of what's going on in your organization in terms of how you are using your resources. And that matters not only for transparency, of course, but also for making quick course corrections when needed. So again, the framework is flexible, the tool is flexible, you can download it, customize your organization. But if you already have some internal tools in place that you already use to track your expenses, you can benefit from the case studies you are bringing, the recommendations we are bringing, the ideas on how to properly do financial management in this section. Finally, as I mentioned before, for me, this is a special feature of the toolkit. The most interesting part for me is to hear from practitioners and some stories that you heard also in this panel. So as I mentioned, we heard incredible stories from this amazing organization that we would like to share with you. We have here some of them in the panel and in the and hearing from us today that you can check their stories in the toolkit. And finally, the last thing I would like to emphasize is there's a great opportunity for you to bring together your finance and ML strategies. So making a unique organization strategy or unique organization vision for the future. So you can implement some features of this toolkit, having in mind also the recommendations and tools for the previous toolkit we launched, specifically on ML. So imagine, for example, being able to say not just we reached 1,000 children, but also we reached 1,000 children at a cost of X per child, while keeping administrative costs under X%, for example. So this is much more powerful to our narrative and plan, and of course it helps guiding decisions, builds credibility, and put you in a better position to really monitor cost effectiveness, right? So cost effectiveness really means the way you use your resources in an effective way, but in order to maximize your impacts, right? So you have to have these two kind of metrics in the same place to balance that and to make strategic decisions. So that's it. So wrapping up here, again, the main points I shared with you today. The toolkit was built from real-world experiences. Second topic, it's for anyone in the organization, not just the finance staff. I'm sure, yeah, we have the QR code here. It comes with templates and case studies you can actually start using tomorrow. And it connects finance with impact. So sustainability is not about numbers, but scaling your real impact. So you can download the full toolkit by scanning this QR code or visiting the GSF website. I'm sure Priyanka will drop you some links here to facilitate your access to the toolkit as well. And my final invitation is really simple. So try it out. Start small, test one template, see what happens, bring people together to discuss it, bring it to into your strategic meetings, your annual reports, your yearly planning, and so on, and really pick something that is most useful for your organization today, in this context, in your present context, and move move from there. So thank you. I'm really excited to hear what you will do with this toolkit.
Thank you, Lucas, for taking us through that. And thank you, Sane, and the rest of the panel for sharing very specific insights with us. Sane, we have one question in the chat from Samuel, which is around sort of how do we ensure financial sustainability in a context where people are not settled? We also only have 5 minutes. So anyway, we can quickly get some answers from the panelists on this in like 2 to 3 minutes.
Yeah, so looking at that question, I think I'd like Victoria to respond. You touched on migration and movement of people, and then maybe Irene can follow. Yeah.
Yes, so for us, when we work with migrant population, we have many challenges, but for us the solution was to look at our business model as an integral model, because it's a cross-subsidized model. You have these different units that allow this funding to come for the migrant population. Also, to be really transparent with you, because this kind of questions needs transparency, we began this pilot with one donor that was specifically interested in us reaching this migrant population. So it's the combination between having this broader approach in our business model, but to have this specific funding for this population. Later, we began to understand some specificalities of this migrant population, to do some training for the women as to allow them to become informal caregivers, so to understand where, if it wasn't in a specific like ECED center in training, where the children were having their attentions. So we began to do some training to this population, but it's really complex. There's not one solution that can fit you all. But for me, the advice is, when Lucas was presenting the toolkit, you have to look to the 3 pillars. So you have both your business model, but financial planning. It's really important, because it's not only understanding your business model, but to do some planning to understand where are your revenue stream coming from.
Thank you, Victoria. I think, Irene, maybe you can also shed some light around the complexities of working in unsettled environments. You're muted. Don't know if you're able to unmute.
I beg your pardon?
Yeah, I was saying that the question was around how you manage this environment, because the community is not settled. So some are moving in and out, and what that means for childcare sustainability.
To me, it was a call for the community and the stakeholders to be involved, not only the school, but the community to own for the safety of the kids. As long as they are involved, they can take care of these kids. So as long as the environment is not safe, if you involve the community, they will become the security for those kids. Thank you.
Thank you, Irene. I see there's a few more questions now, one around culture and how you get the sustainability. I don't know how we're doing for time, Priyanka.
Yeah, we just have a minute and one more thing to kind of get through to. But is it possible for the panelists to maybe just use the chat to answer Samuel's second question? As I'm just kind of talking through some of the next steps, if all of you could just take a couple of minutes to answer sort of your give your reflections on that question. And to Lewis's question actually ties in very well to what I wanted to speak about, which is probably a larger sort of discussion, which we may not be able to have right now. But like Lucas said, and sort of I would also like to reinforce, is that this is sort of just the beginning of the conversation. And we would really like to identify ways that we can connect with you and support you on some of the sustainability challenges that you might be facing. There are multiple things that we currently have in the pipeline to continue to stay engaged with the broader community. One is a community of practice where we want to bring together sort of practitioners that are sort of navigating through similar challenges. They can come together and share sort of like learnings and best practices. We are also open to connecting with various organizations who maybe would like to get on one-on-one consultation calls with us and try to figure out what tailored support might look like for you. And also, if you'd like to do some level of deeper sort of engagement with us and do some sort of a action learning study on how these toolkits can be adapted to your context, recognizing that no two kind of emergency contexts are similar, we're also happy to provide sort of some additional adaptation and testing support. All to say that there are various ways for us to kind of stay connected on this toolkit and continue to find ways to engage. I'm sharing a sign-up sheet in the chat if you're interested for us to kind of circle back with you and connect with you after the session. Please sort of signal your interest in the sign-up sheet. You can also signal what kind of activities you would like to get involved with. If you have other ideas apart from the ideas that I have shared today, please feel free to write that in the document as well. I know we are over time, but if you could just take a minute to maybe get on the link and just kind of like add your details, that would be incredibly helpful for us to kind of close the loop on some of these open questions that we weren't able to get to today. I see a couple of people are already on the document. Maybe we can take like 30 seconds to sort of fill that, and then I'll open up a poll for us, which is primarily getting feedback sort of on this session. So I'm just gonna mute myself for 30 seconds and come back with the final poll and sort of some final acknowledgements. Awesome. I see a couple of people are already kind of filling that in. Feel free to kind of also come back to this sheet at a later point if you have other sort of ideas. I'm also going to simultaneously just launch a poll. I know there's a lot to do for you today. If you can give us feedback on this session, that would be incredibly helpful for us to continue to improve. And once you have taken the session of poll, feel free to drop off. But before you do that, I'd really like to thank all of you for being a wonderful audience today, but also a huge shout out to all our panelists, to Sane, to Lucas, for taking out the time to share and talk about a pretty difficult topic and still trying to like cull out meaningful, useful insights for the larger community. And similar to the invitation we had for the audience, we'd love to stay connected with you and continue to find ways to collaborate. So thank you so much. And we hope to stay connected and see where this work goes. Thank you.